What's up, everybody? So we are back. It is episode number 8. We're making moves here. What does that put us at, like 2 months in a row now? Not bad. It's just me here again. Some quick updates I wanted to go over, and then some advice as well, as I usually try to give. So a couple of points for today: the impact of Doge, the Department of Government Efficiency, and also rolling layoffs, and what you should be ready for with all of that. Myths about corporations and LLCs, entity filings in general, and the tax status is potentially attached to them. Social Security payments and tax refunds paid to deceased wrongfully, allegedly. How do tax withholdings work and what you should do, and how do tax extensions work? I think that being that we're right in the middle of tax season, that's really important to talk about. So let me start from the top here. The impact of the Department of Government Efficiency and what they have been doing, as well as rolling layoffs that seem to kind of be happening simultaneously, and what that could mean for you. So with the Department of Government Efficiency, obviously they're pulling back tons of funds. They are, causing layoffs in the government sector. But how does that translate to people who don't work in government? And you'd be surprised, I guess, I kind of was, to just realize something that I don't actively think about, which is that when government agencies or government funded businesses like nonprofits get impacted by what Doge is doing, whether for better or for worse, other companies can get impacted as well. So this was brought up to me the other day, which is that company could be, let's just say, advertising company, a media company, and one of their biggest clients is going to be a nonprofit that utilizes them quite often throughout the year I'm talking about a big nonprofit that spends millions of dollars every year just on advertising spend, and they get their funding frozen because Doge is looking into USAID, for example. Because they get their funding frozen, they have to stop, obviously, doing advertising because they have nothing to pay for it with. And because of that, that media agency, who this may have been their biggest client, or top 5 clients, they are now going to experience some serious revenue forecasting issues. And when that happens, guess who else has to do some layoffs? That media agency. So it's like this rolling effect of what the impact from the very top level things that we just kind of hear in the news quickly, but not what those lower level impacts of it might be. So again, like, Doge rescinds money from USAID, freezes things to perform this overhaul that they're trying to perform. The nonprofit that was relying on funds from USAID can no longer spend on ads or spend on whatever else it spends money on. And all of those vendors, to which this is probably one of their larger clients, being that they spend millions of dollars a year to those vendors now will likely have to do at least furloughs, possibly even layoffs. Furloughs being like a temporary layoff, like, hey, we can't use you for 6 months, but you can come back after that potentially. And so what do you do? So that's something that you need to think about. And when that happens, right, you need to think about, do I qualify for unemployment insurance? If I do qualify for unemployment insurance, is it going to cover my monthly expenditures? When I apply for unemployment insurance, I need to be mindful that they are doing tax withholdings on me, because if I grab that unemployment insurance and they're not doing tax withholdings, but I've already been working this year, making a significant amount of money. Now I'm not working, but my unemployment insurance had no withholding, so now I owe a ton of tax at the end of the year. Like, these are all things that you need to be actively, constantly thinking about. Also, health insurance, right? Health insurance for some people is not so important because they're fairly healthy individuals. For other people, maybe they're expecting a kid, maybe they have some sort of disease that they're dealing with chronologically, and you need health insurance. Are you going to pay for a COBRA plan? How are you going to afford that? Is your company, if they lay you off, do they generally give severance packages? Are they going to provide you insurance for a while? That's another thing to think of. So that's some of the things with the impact of Doge and these rolling layoffs. Now, one of the other things I wanted to talk about was Social Security payments and tax refunds being paid to the deceased. So about 2 weeks ago now, there was a story that came out from the IRS that they uncovered $31 million paid to deceased individuals. They just uncovered this from like their first check. And what happened there basically was they were finally given access to the Social Security Administration's database of deceased individuals. And they started cross-referencing everything and figured out all of these payments at $31 million dollars is a lot of money. Imagine how that stacks up over the years. And, you know, maybe by coincidence, I don't know. But you know, these last few days, you've been hearing stories about how Doge discovered some social security payments being made to deceased individuals. It was stated that and if you've seen this again, we need to wait for everything to get completely verified. But so Elon Musk comes out on X with a chart that basically shows by age group how many Americans are receiving social security payments. And then you go to the age groups that are over 100 years old, all the way up to like 300 years old or something. I mean, in that category, it was just like one person allegedly. But let's just say over 100 years old, there were 20 million payments going out to to individuals. Now, whether they're actually deceased or not, we don't know. They obviously have to do more research on that. But the latest statistic, from what I understand, shows that we only have about 100,000 people in the United States who are over the age of 100. So even with that, that is, grossly overpaid to these deceased individuals and social security payments. Meanwhile, we're dealing with a crisis where in 10 years, we might run out of social security funds to pay people who are alive. So, I mean, that's crazy. This, has nothing really to do with taxes, but just something that I thought was interesting as we are going through this era of, public scrutiny of all of these various government agencies and misappropriation of funds or loss of funds or fraudulent spending of funds or you name it. And again, a lot still remains to be completely proven, but even if there's a hunch in this direction, that's already not good, in my opinion. So that was that. Now, more down to brass tacks and less of current events. Myths about corporations and LLCs. This comes up often, and people are constantly opening businesses. Like over the last 10 years, there is no exact statistic on this because it's a little bit difficult for the government to keep track of. But over the last 10 years, roughly 5 million new small businesses have been opened. And that doesn't even consider those who are just sole proprietors, not actually forming corporations or LLCs. So the number is high and it has not slowed down, right? So it's still going at the same speed, if not faster. So constantly people are getting into new small businesses. So it's important to understand what the myths of LLCs and corporations are. Myth number one, this is my biggest one that I like to tell people when they even tell me they're considering opening. And if you've been one of those people who have asked me, it's the first thing I say. Do you need the LLC? Like, what do you need it for? Do you know? Or did somebody just tell you that they did it? Or, supermarket talk, barbershop talk, nail salon talk. The LLC is a legal entity only. It does not have any impact on how you do your taxes. The only thing it might have an impact on is if you have to do some sort of annual filing with the state in which you're registered. Otherwise, the way you report your income, the way you report your expenses, what you can write off, what you can't write off, how you take money for yourself from your profits, everything is the same, whether you're an LLC or a sole proprietor slash partnership, whichever one you are that you've turned into the LLC. Now, the next myth, somewhat of a myth, is where should I register my LLC? So you will often hear like, hey, open up in Delaware or open up in Wyoming or open up in Nevada. They have, the best laws to help you. The question then becomes, and of course, speak to an attorney about this to get a real professional opinion, but do you need that help? Do you need Wyoming for its lack of state income tax? That's a great question to ask. So when it comes to Delaware, it's always been stated that they have very corporate friendly laws. So when you open up a business, if you may potentially need either legal protections in the future or involve new investors, Delaware may be a state that's friendly to you. If you're opening up, just a medical office or some sort of mom and pop brick and mortar shop, in Florida or New York or Texas or wherever you may be, do you need those Delaware corporate protections? You still are gonna be working in the state in which you're at. Like, the Delaware is gonna do nothing there for you. They're more for, if you are opening, some sort of fintech company or some sort of startup that where you may need heavy investors if things go the right way for you, where you get venture capitalists involved. They usually want you to be registered in a state like Delaware because the corporate laws are gonna be friendly for them, right? What's up, everybody? I just wanted to interrupt for a quick second to say, please, if you're enjoying this, like this video, bookmark it, subscribe to the channel. It really helps me a lot. Share this with your friends. I appreciate you all as always. And now back to the video. However, if and when that time comes, you can also always just reorganize there from whatever state you're already in to get that assistance. You can always restructure, and they'll probably want you to restructure anyway. Again, speak to an attorney about these things, but that's one of the most important points. Now, people will go to Wyoming for their privacy laws, right? Their corporate privacy laws. So your information is least likely to be found, or it'll be hardest to find if you're incorporated in a state like, or organized in a state like Wyoming. Here's the thing. Whether you open up in Delaware or you open up in Wyoming, you still need to be registered in the state in which you perform all of your services. So if you're in Illinois, if you live in Chicago, and that's where you're opening up your business, even if you register in Wyoming, Illinois still needs you to register there. So now you're creating double the headache for yourself. You've got annual filings to deal with in Wyoming. You've got annual filings to deal with in Illinois, and you got another issue to deal with with your tax preparer who's annoyed with you, right? So keep in mind, I would always say, and again, speak to an attorney, but as a tax professional, register in the state in which you're going to work or in which you're going to operate your business, because that's where you're going to have to be anyway. Save yourself a couple dollars on that headache. The last one to talk about is the S corp tax status and when you should do that. Way too often I get a new client who comes to me and says, "Hey, can you do my taxes? This is what I have from the individual side, and I have this business. It's an S corp." Okay. My first question is going to be, is the S corp profitable? How long have you had it? Who advised that you do this? Do you know why you're an S corp? And the answer, I would say like 7 out of 10 times is going to be, yeah, no, I was just told to do this and I did it. A family, a relative said it who works on taxes, or I heard this from a friend, or I heard this at the store. You need to always be sure, first of all, before you do anything, regardless of if it's an S corp or not, are you satisfied with your knowledge of why you're doing something like this? What are the benefits? What are the drawbacks? Those are the top 2 questions you should be asking. How much this is going to cost me will be the third one. Benefits of an S corp are that they can potentially save you a lot of tax dollars in the form of FICA tax, Medicare and Social Security tax avoidance, legal avoidance, right? That's the only place an S corp is going to help you in avoiding Medicare and Social Security tax. That's it. Drawbacks are going to be the record keeping requirements, the cost of the record keeping, the payroll requirements, and paying yourself as an officer a salary, and that separate tax return at the end of the year. So I'm not going to do an entire video now, an entire episode on the benefits and the drawbacks and how you do an S corp and what the specific rules are. What I want to emphasize is it's a myth that it helps everybody. More often than not, it's a burden. If you're not a profitable company, if your profits are very small, if you're a disorganized person, the S corp is going to be more of a burden on you than it's going to help you. That's the myths about corps and LLCs. Now, how do tax extensions work? So also a question or a request that I get often is, we're not ready to file yet, or we know we're going to owe money, but we can't really afford to pay the tax money right now. So please put us on extension. We'll circle back to this in September or October when our tax return is due. And it's not even so much that this is a myth, but it's a misconception, which is that if you file an extension, that you don't have to file your actual tax return and you don't have to pay the tax. And that's false. The truth is that you don't have to file your final version of your tax return by April 15th or whatever your due date is. You do have until the extension deadline to do so, but that extension is only an extension of time to file. It's not an extension of time to pay. So even if you're not ready yet, maybe you're still waiting on some forms from businesses you're involved in or whoever, and you're not ready to file yet, or you think you're going to have to pay, so you don't want to file just yet. It doesn't matter. Put together what you can. Even if you go on extension, at least figure out, consolidate everything and figure out, am I likely to owe money this time around? If yes, how much roughly do I expect it to be? And do your very best to prepay that amount if you can. At least know what it is so you can start making the right plans to take a step in the right direction. You'll deal with some interest and penalties, but they won't be as bad as finding out in October that, oh shit, like I thought that I didn't have to pay, and then it turns out that you do. It's a very, 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 one of the most common misconceptions is that an extension of time to file is also an extension of time to pay. It's not. Please keep that in mind. Um, how do withholdings work? So here's an issue that I run into all the time, and I've done so many different clips on this because it's just so common. Somebody, you have a job and you figured, groceries are getting more expensive, cost of living is getting more expensive. I need to pick up a second part-time job, and you go pick up that second part-time job, or you got married to somebody who also has a job, um, or or a combination of those things. And what ends up happening is that you end up being under withheld for income tax at one of your jobs, both of your jobs, all of your jobs, whatever the case is, especially when you throw in the extras. You have money invested in a brokerage firm where you're getting dividend income, interest income. Maybe you have a small business that you're getting income from and not prepaying taxes on. So withholdings become a massive issue and another thing that slaps you in the face during tax season, that could cause you to owe a ton of money, or even on the flip side, get a huge refund. When who wants that? So with withholdings, you need to be constantly reviewing this thing. I say it all the time. I can't emphasize this enough. At least twice a year, once during tax time, once around September, October, do a review of all the income that you're making from the various sources you're making them from, all the various tax credits and deductions you might qualify for, and then how much in withholdings you've had so far this year. And are you on track to, meet the minimum tax that you're going to owe, or are you on track to exceed it, or are you way far behind the worst case scenario, where you can end up owing not just a ton of tax money, but also penalties and interest that come along with it. Um, it's very important to do that. Now, if you are involved in self-employment in a business, 4 times a year should be your number, but at least twice. Um, if you know that you're somebody that makes a significant amount of money outside of your regular day job from trading, investing, small side hustle, that's something that you really need to evaluate with your tax preparers, in determining whether you should be paying quarterly estimated taxes. The reason for that is, sure, you can save up money throughout the year and pay your $10,000 or $20,000 tax bill at the end of the year. However, the IRS incentivizes you to pay in bits throughout the year, those quarterly estimated tax payments, by imposing an underpayment of tax penalty on your tax return if you don't satisfy a certain payment throughout the year. This one's kind of simple. It basically says that, so you're filing your 2024 tax return now. If during 2024 you've paid 100% of what your 2023 tax liability was throughout the year, you will not incur this penalty, even if you still have to pay an additional amount with your tax return. And then the second option is, if you don't go by the previous year rule of paying 100% of that tax, is you have to have prepaid 90% of your tax liability for this year. That's a way more difficult one to juggle, because then you might have to be on top of things every month, and most people are not going to do that. So again, something that needs to spark a thought in your head to have that conversation with your tax preparers this tax season. And of course, when you're counting these things, you got to take the total picture. If you have a W-2 job, if you have kids that you're going to claim, if you have kids who are qualified for the dependent care credit, that you're going to claim, if you have tuition credits that you're going to claim, if you're going to contribute to a retirement plan, is it going to be traditional? Is it going to be a Roth? Are you going to get a tax credit for that potentially? Do you have a business? Do you have rental income? And so on, and the list goes on and on. So make sure you're looking into these things. That's pretty much what I wanted to cover today. I do think that the Doge and rolling layoffs is kind of important just because so many people are susceptible to this and may not see it coming. Because again, it might not be your company that's directly impacted by something that's, happening in regulations, but it could be indirectly impacted by losing clients. So definitely important to stay on top of that. And then extension season is the next big one, because many people go on extension these days, especially as boomers are retiring from the accounting community in terms of being tax preparers. That really overloads the rest of us, and we may not have time to prepare everyone's tax return in time. So you need to make sure that even if your accountant is the one who recommends that you go on extension, that they're doing some sort of preliminary check to see if you might have to prepay some taxes now versus getting slapped with a huge fine in October. Yeah, that's it for me. As always, please like, share, subscribe. Let me know what else you want to hear about. I'm always happy to take ideas. If there's anybody you'd like me to speak to, I'll do my best to reach out to them. And with that being said, I'll see you guys soon.